What is up, everybody? Welcome back to another episode of Real Estate Served on the Rocks, powered by Living in Colorado, The Mile High Perspective on YouTube, Fathom Realty, as well as Keller Williams Downtown. And as always, we are here at the Rouge Wine and Bourbon Bistro in Greenwood Village, off of exit 197 on I-25. Beautiful space. And if you're on audio, you can't see it, but we got a beautiful man sitting here next to us today.
He is very handsome.
If you're longtime listeners of the podcast, you'll know who we have today. Colin Keenan. He is our lender favorite here. That we
Lender
like to bring
extraordinaire.
on. Lender extraordinaire.
Hello. I'm the guy that talks really quiet, which is just so soothing for the audio only.
Yeah.
Yeah,
Like this will be an ASMR episode.
Yeah, he has
with
yes,
Colin Keenan.
ASMR
So
mic.
if you guys are having trouble sleeping at night,
Just go
Tune
ahead
in.
and tune in.
I'll start
Tune in.
doing
But as
whispers
always,
in the
guys,
mic.
my name is Charlie Sardelli, and I am here with,
Jameson Amaros.
Oscar Ibarra.
and we have a really, really good topic for you this week, especially if you're paying attention to mortgage interest rates and what's been going on. In today's episode, we brought Colin in specifically to talk about how to refinance your home loan or your home mortgage, especially because as we see interest rates come down, we've already seen, what was the percentage jump in refis, Colin?
A good jump. Yeah, you've been seeing, and the bigger jump is the conversations that we've been having.
Mm-hmm.
But yeah, there's been definitely an increase in refinances over the last couple months, just with some of the gains we've been getting on interest rates.
Yeah,
I
I
mean,
think anytime you see mortgage application rates jump, refis jump too, right?
Yeah.
Would that be fair to say?
And I'm glad it's happening now because we've been, kind of pushing the envelope. Do it now. You're going to refinance soon. Soon
Yeah.
is now.
Mm-hmm.
now
I mean,
it's
if it didn't happen, we'd look
Now
like
is
idiots, like crap. And that's the
Uh-oh.
episode.
Yeah, and that's the whole thing. No, guys, on today's episode, we actually have a really cool bourbon to drink as well. Now, it's a little bit out of our wheelhouse because we normally stick to bourbon. We have a couple ryes every once in a while, but
we were rye heavy for a while
a couple weeks
back at the old spot.
yeah,
Yeah, we did a few
we
in
did.
a row, didn't we?
Yeah,
I
Mhm.
like ryes. I mean, that's we're talking old fashions. Ryes
I mean,
my
it's
go-to.
it's hard for me to say I like rye because we've had only good ryes.
but you have such a rye sense of humor.
Hey,
Huh.
Nice.
But
Nice.
your flavor palette isn't that either.
yeah,
Yeah,
fine.
your
Yeah,
your palate's different.
true.
Well, Oscar, you're a rye.
I like
palate.
ryes.
I'm a rye palate.
I like rice.
Yeah.
Colin's a bourbon.
A bourbon palate.
He's just a
I just
alcohol
like
palate.
bourbon.
Bourbon. No, he's a good old American beer.
Yeah.
All right.
He
I
doesn't
like
Jack
the beer you
Daniels.
like.
So I'm gonna go ahead
Lots
and pour
of
it out,
people.
but the
Fries.
bourbon that we're drinking today is Remus Babe Ruth Reserve. Now, this bottle actually is pretty cool in the fact that, sorry, I'm leaning into the mic, so I'm yelling at everybody. But this bottle is distilled in Indiana in what's called Whiskey City. And what's awesome about this particular bourbon
Look at that reach.
is that on the back of every single bottle, and I'm gonna see if I can show you guys here, right there on the bottle, there's a QR code. And the reason that this is the Babe Ruth Reserve is because that they actually combine 3 separate rye mash bills into this bottle. So this bottle specifically is bottle number 1553, and I'll tell you why that's important in a second. And it has a medley of 3 mash bills from 2016, 2017, and 2018. The 2016 is 44% rye, the 2017 is 49% rye, and the 2018 was 36% rye.
Interesting.
Yeah. So the reason that they combine 3 barrels is a homage to the Babe, the Great Bambino's number 3.
Right.
So they combine the 3 barrels, and that's kind of what makes it Babe Ruth's Reserve.
Interesting.
But on top of that little QR code that I sent you, and the reason that the number of the bottle is important is because on the back of every bottle with that QR code, if you scan it, it will actually bring you directly to Babe Ruth's at bat for that number at bat. So this one for this bottle, again, number 1553, he was at bat against I think it was Indiana, which is
Oh.
pretty crazy. And it was June 20th, 1920.
Huh.
And what I really love about the explanation for this, when I was reading the bottle, is that they say that they love that the reason that they made the bottle the way it is and that they call it Babe Ruth Reserve is because that Babe Ruth was kind of like the hip, the cool celebrity of the 1920s. And if you watch baseball, you know Babe Ruth changed the game of baseball forever, legitimately, and created a curse that the Boston Red Sox only just recently got over, like couple years back.
Also, inspiration for one of the greatest baseball movies of all time,
Yes,
The Sandlot.
that's
Wow.
right.
Yeah,
That's
great
right.
Bambino.
So I got a question then,
Yeah.
because we've talked about this. All whiskey is bourbon,
Mm-hmm.
but not all bourbon is whiskey, or is it the opposite?
All
I
yes.
Because
Not
to
all.
be bourbon,
Not all bourbon is whiskey because some bourbon is rye heavy, so therefore it's not a whiskey
right,
because it has to have a certain amount of 51% corn.
right, but it's not the same as, because there's a misconception. I'm just saying this because the bottle says that where it's distilled is the whiskey city, right?
Mhm.
And a lot of people think that in order to have bourbon or whiskey, it has to be distilled
Kentucky.
in Kentucky, but that's not actually the case.
Kentucky.
Well,
It
and
is
then you have the
it's
Japanese stuff.
It's a mash bill, right?
Mhm.
So it's a mash bill that determines whether it's a whiskey or a bourbon. But a lot of people just assume it's like, champagne has to be made in the Champagne region of France. But bourbon doesn't have to be a Kentucky-based distillery.
Correct.
It just has to have a certain mash bill.
Mm-hmm.
So
Yes. Yes.
just to clarify.
And again, we're
Someone fact check
drinking
that,
this
man.
bottle because we are in the MLB playoff season.
and we're in a spot
Yeah.
that is modeled by the Roaring Twenties,
the
which is
the
kind of
Roaring
cool.
Well, you said the cool, like, baseball player of his
Yeah.
time. That's kind of a crazy thing because back then you were at bat smoking a cigarette.
Yeah. Oh yeah.
So how cool was he back then?
I think he was smoking a cigar at one
Yeah.
point.
Yep.
Right?
Oh, yeah. Like in almost every picture you see of Babe Ruth, he's smoking a cigar.
Yeah.
Now they call that habit stacking.
Well,
Yeah.
Yeah.
you know,
Oh, 2024.
Yeah.
it's frowned upon now, but can you imagine he's at bat with a big old stogie in his mouth? That'd
that
be
would be awesome.
awesome to see.
That would be awesome.
I would like to see. Yeah, that would be cool.
Yeah. Well, here, hold on. Let me actually.
Although
I wanna-
now it wouldn't be a cigar. It would be a vape pen.
if you're if you're on the video, what I want to do for you guys though, just because you don't have access to the bottle, I want you to see it. I'm gonna bring the bottle up to the camera.
Ooh.
So if you want to, just so you can pause
4D.
it and scan the QR code. So definitely here. You guys keep talking. I'm gonna do
Is
that.
that why we're filming in like 3D now?
Yeah, I think so. That was why the
3D.
4K. That's why the 4K was there. It's to make us look worse, but the bourbon look better.
Yeah, the bourbon looks like
Yeah.
it looks awesome, but Oscar, you need.
It's very
Some
in your
work.
face. Man, imagine if they had like VR goggles.
Oh,
Oh yeah,
You just reach out and grab it.
be awesome.
I don't
Awesome.
think
All right,
that's how
so
it works, but
if you're watching or listening, go over to the video on YouTube and pause it at that moment, and you'll be able to scan the QR code and see kind of what that experience looks like, seeing the at bat. Unfortunately, with this one, he didn't hit a homer on this at bat. He went one for 5 in this game, but I mean, look at it. It's
I mean,
still
you
here.
get
He's
a
got
prize
the
if he
bottle.
did. I
Yeah.
mean, call the company. He hit a bat with this. Do I get a free bottle?
Right. I'm gonna go ahead and just stick my nose in. So this guy, what's his
Hey,
proof?
hey.
111.
Oh, we're back to that.
We're back to that.
Yeah, we got a very small break last week.
Yeah.
That's what happens.
A little bit of a break.
When I come on, they get strong.
That's right.
Oh, we had
Strong.
like what 120?
140
We had
was
3
the,
weeks
was the
of-
highest.
Yeah,
yeah.
we've been dabbling in some.
Welcome
Unleaded
back.
What is that
gasoline.
smoke wagon?
Huh? Smoke wagon was like 112,
110.
110.
Mhm.
Man,
This
that
is
is-
one.
that is
one
straight
this is
diesel.
110.
Yeah.
Yeah, this is 110.
Straight diesel. Yeah.
Oh my god. Yeah.
This is a paint thinner.
Yeah.
I mean, it's
the first sip you get hammered,
yeah.
but the second and the third you start to smell a little bit.
I'm definitely getting a lot more of that like dry, of course, because it's a rye, but more dry fruit
Mm-hmm.
than anything.
Not all high proofs hurt.
And
No,
we've
and
had some where
There are
we've had
definitely
some where
some.
they make you do that.
You know,
Did you try it?
No,
and then you
Oh.
sip it and it's the burns.
that
not as
happened 2
bad.
weeks ago. I forget
Yeah.
what it was, but
Mhm.
it was like 120 proof.
it's like
No,
a sweet lacquer.
I was gonna say almost.
Yeah.
The wood is really heavy.
Yeah,
in this.
like
I also get a lot of licorice.
Yeah. I was gonna say like a darker chocolate.
Yeah, I get like dark licorice,
Mm-hmm.
not Twizzlers, like real licorice.
Yeah.
Anise.
Not that AMC 24
Anise.
shit.
Black licorice is anise.
Anise.
Huh.
Star anise. That's the flavor.
Star anise.
Huh.
You're towing the line with some words today, my friend.
No diddy. Star anise. That's what black licorice is anise.
Toe in the
Just saying.
line.
You're towing
For
the
all
line.
the Spanish speakers,
Yeah.
it's anise.
Sometimes the jokes come to me like
Oh, man, no,
5
the spice
seconds
is
after
heavy.
Right.
Everybody laughs.
On the nose. All right, gentlemen, let's go ahead and get a sip in. Cheers.
Cheers.
We really need a larger table.
Yeah.
We do.
I just got comfortable, man.
I know, right? All right.
What you just heard was a bunch of grown men
Standing
old.
up.
Need to go hit some cardio.
All right.
I forgot I had to stretch before this.
I did not stand up. Otherwise, I wouldn't have sat back down.
Yeah, see?
Yep. See, dangerous.
Yeah, it's not. If
No.
I were to,
Matter of fact, that is significantly less burn
yeah,
on the tongue that
But it is spicy
It is
It is
spicy,
spicy.
but it's
back
not
here in the throat.
But it's not like a. It's not an
No.
ethanol spice.
It's a
No.
peppery spice.
Yes.
Yeah.
Not like spicy,
No.
like hot chili spicy,
Yep.
and not heat from the alcohol. It's
No,
peppery.
it's pepper.
Very
It's- yeah,
peppery.
yeah.
definitely pepper. That, I mean, the vanilla and caramel are subtle on the back end,
Mhm.
but I feel like it really, as it hits the back of your palate,
What's the corn on
that spice doesn't
it?
say.
It's just the rye.
Yeah, just
Huh.
rye.
Interesting.
Have any corn?
I will say that it's
well, because corn normally sweetens it,
Yeah.
but this is very.
The wheat,
I
if
was
it has
gonna-
any wheat in it,
maybe.
it usually
Yeah.
tames it too.
But
This
I
is
mean,
pretty rugged
it is. It's
in a
it's
good way.
definitely dry. I will say that what's different for this for a bunch of the ryes that we had is it doesn't feel grainy. Like, we talk
No.
about like a silky
Mhm.
mouthfeel, cream out, whatever it is. This doesn't feel like heavy on your tongue. It's very light.
It does sit on your tongue though. Like the
the
spice
flavor
sits on the
sits,
front
yeah.
of the tongue. Like it's almost like how do I want to describe it? Not like a Sour Patch Kid, but very similar sensation.
Yeah.
Like I could
Like
like
a
you
Red
take a
Hot-
Sour Patch Kid, but you take the fruit out of it, like
Yeah.
the fruit flavor out of it.
Or like those red hot the tamales one, the
Kind
spicy
of.
cinnamon.
Mhm.
Yeah.
Not the sweet or the cinnamon flavor, but you know how it
I'm
just
excited
lingers.
to see how this opens.
Remember
I
those
know.
fireballs?
Like it'll be. It reminds you of Fireball. Is
no,
that
the
what you-
fireball.
Yeah, the
changes.
jawbreaker.
Yeah.
Yeah.
Candy.
Yes.
Yeah.
No, but it definitely.
But
it
you know what I'm
doesn't-
trying to say.
What's really weird about it is we've had a lot of bourbons, rye specifically, that when you take the sip, it kind of like engulfs your whole
Mhm.
palate, like your mouth. But this one, for me, I don't know, but it stays on the tongue. Like,
Yeah.
it's not.
It goes directly tongue esophagus.
Mhm. Yeah, there's no like burn or anything anywhere else.
I'm just trying to figure out that on the front of the tongue, what that aftertaste is.
Leather.
Yeah.
Well, I was gonna say the wood flavoring is there, like
Mhm.
heavily.
I wonder
But
what the
it's
char.
like,
I'd like to know what the char is on it.
Me too.
What barrel they use.
I think that's what we're tasting.
it's got to be
char.
a,
The
like
char.
a 3.
Yeah.
Probably
Yeah.
a 3.
Tell you what, every time I come back, your guys' knowledge and where you're at is every time.
Oh,
It's
we've,
good to know.
we've come a long way from our Jack Daniel shot days.
we
at least
whoa,
know. I mean,
whoa, that was a shot.
yeah.
If you guys are familiar, Colin, when he does our rock rating, he says that in relation to Jack Daniels.
Yeah.
Yeah, he sets the bar very low.
Yeah. But no,
Yeah.
I'm excited.
I
I
open
mean,
it up
just
for you guys.
the history behind this bottle plus the flavor, and this is gonna sound really weird, but up front, like if I was gonna think of a bourbon that Babe Ruth would have drank, this right here.
Absolutely.
That one,
I mean,
get that.
I could drink this with a cigar.
Oh yeah. Oh, absolutely.
Yeah.
The cigar
Would
This is very
complement
good.
it. I
would,
think.
yeah, it wouldn't. Usually the smoke kind of just, it's
Yep.
going to overpower
Yeah.
what you're having. That's why
Mhm.
most people drink scotch because it kind of blends with the
Which
peat.
This would
you
make
missed it. But
Oh, yeah?
tell you what,
Oh, that.
the
that
exam-
Scotch tasting,
yeah.
man,
Yeah,
that was
sucks, man. I'm
eye
sorry.
opening. Colin was there for that one actually.
Yeah. That was
Colin's
Yeah.
never there for anything I go to.
Yeah, which I do want to call out, and Charlie, you can interrupt
Yeah.
me, but as we're filming at the Rouge Wine and Bourbon Bistro, one of the reasons that we were excited to partner with these guys specifically is because they put on more specialty events than most bars, restaurants that I've seen, and
All
they're
year.
not like they're well thought out, well curated
Yep.
events. So, for example, and I'll bring this up because we had a great time. They had a mezcal and Scotch whiskey tasting 2 weeks ago.
2 weeks ago.
2 weeks ago, with appetizers that were picked based on the tasting. They had the liquor reps that were there that were extremely knowledgeable, that walked us through the different levels, the different bottles, the level of peat, which I didn't even know was a thing, as
Mhm.
far as how many
Like yeah.
per
yeah.
per liter, how much peat is there, and then they rolled up with an outdoor cigar lounge.
Humidor.
yeah.
No,
No,
cigar
cigar
lounge?
lounge.
Yeah.
Like,
Wow.
like it was
It
a
was sweet.
trailer that legitimately folded out into a patio with a generator. We had the football game on.
Yeah.
We had the guy that ran it
Dude, that
was
was an
walking us
awesome
through
event,
all
I
the different
guess.
cigars. He
That was
had
pretty cool.
your
Yeah.
standard like Maduros and all that kind of
Mhm.
stuff, but then he also had house wraps. So he wrapped his own cigars
That's awesome.
for specialty tobacco and whatnot. Phenomenal event, and
I reached out to him. I'm trying to figure out how we can incorporate cigars into the real estate conversation.
phenomenal
Yeah,
event.
that would be
Maybe
awesome.
we'll talk about how to ventilate your home, smoke cigars.
Hey.
Boom. How to make like a cigar
Hey.
So
smoking room.
anyway,
And we could buy cigars and write them off.
Boom.
yeah. So if you guys
Yeah.
haven't checked out this place, We came here for dinner the other day. It was fantastic.
Yeah, I came to their brunch and it was
You
really
gotta
good.
check it out.
And you know what I
Yeah.
like
You gotta check it
is
out.
that you'll have, your random bars doing events, and it's just like we're gonna barbecue in the back, have some
Right.
hot dogs, burgers, and call it an event. When they did the Old Forester event, it was reps from Old Forester. Their master taster was here.
Yeah, they do it
and
right.
and it wasn't like, come taste it. It's gonna be $12. It was free to the public.
Mm-hmm.
As many pours as you wanted to get from the Old
And they had
Forester bottles.
appetizers at both events.
Yeah,
Yeah,
and it
it's-
wasn't like we're gonna charge you to do this. No, they put in, obviously, buy their stuff. Chef Chris is a great chef.
Yeah,
Their food is
Chris and his team
great.
did a phenomenal job.
Their charcuterie board at
Yep.
brunch. Whew,
Yeah.
it was good.
No, they
Shop
So-
with Orion.
yeah,
they
it
do,
was good.
They do
Or
great
my
events.
kids.
Yeah.
I got a charcuterie board at home for my kids.
There you go.
It says
Hmm.
Oscar's charcuterie board and it has a shark on it.
Nice.
They can't say charcuterie.
I like it.
Anyway, but no, this place does their events well.
Absolutely.
Colin,
Well,
what'd you think? You were here.
Yeah, big fan. They
That's the
did
first time
like
you were
a
here, right?
yeah.
Yeah.
And you're
They
not
did
far
like
from
a-
here either.
No, they did like a little hors d'oeuvres tasting,
Mhm.
and everything that he put out on the table was amazing. There was not one bad thing that I had. They had a little, what was it?
Like the
Marshmallows.
Oh,
s'more station?
S'more
Yeah.
station. Yeah, with all their little fires out, you could like go build up a little plate of s'mores and then go hang out on the fires. It was very, very cool. The cigar lounge was also like
it's like next level.
a hangout spot on wheels. That you
Yeah.
just
That's
like
awesome.
roll up. The
Yeah.
doors fall off. There's a bunch of TVs with all the college football games at that night,
See,
and couches. Like it was
one of the
very
dads on my son's baseball team needs to buy one of those and just park it while the kids are playing. We just hang out.
cool.
There
yeah,
you go.
Yeah, yeah.
That'd be a
saying.
great
Yeah,
idea.
you're like, oh, the kids are going up there. Well, just close the doors, drive it up the hill. Yeah,
Drive it up the hill, put it in the parking lot. I don't
Yeah, yeah.
care.
Well, no, I'm excited to see how this opens up and honestly how it goes along with the conversation
Yep.
because the conversation that we're having today is strictly to try and help you guys prep because as you see more headlines coming out about interest rates dropping, the Fed cutting interest rates, so many people are. I mean, the image in my head is literally just someone sitting there like just shaking, waiting to refinance or get a home loan.
I like the Charlie Day reference where he's on the board
Yeah.
and he's just like trying to
This is
explain
Yep.
what's happening.
Yep, the mastermind
Yep.
board.
And again, it's not going to cost you anything to give Colin a call.
Mhm.
He'll let you know whether it's a good call or not yet.
Mhm.
He'll say, hey, we'll put you on a waiting list. Maybe the rates haven't dropped low enough. Or he'll say, yes, right now it's gonna save you X amount of dollars. It's gonna make sense for you. Call him. He'll walk you through it. If it's not, he'll tell you it's not.
Yeah, and I
And-
think we wanted to bring him on because in talking to other realtors, and I'm going to toot our horn a little bit, Charlie and Oscar. We are probably some of the more educated when it comes to things outside of just buying and selling houses, right?
Mhm.
Partially because of this podcast, partially because obviously Oscar was in the lending world for a really long time, and we get in the weeds with this kind of stuff. But with as fast as the news is coming and how much there is and all these differing opinions and people trying to make predictions, that's why I wanted to bring Colin on as a current active loan officer that is in it day in and day out so that we can give you guys just really good information. Because the
Mhm.
goal is at the end of the day, it's your decision, right? And I always say, people, we're not here to make that decision for you. We want to give you the information so that when you make a decision, you feel that it's a well-informed and it's an easier decision, less stress,
Yep.
all that good stuff. So
And guys, so stay tuned. At the end of the episode, what we're going to do is kind of give Colin the opportunity to give you guys a direct look into the camera and tell you what major factors influence interest rates that you should
Is
be
that
paying
blue steel?
attention to. Blue steel. And how
It's so
how those factors affect interest rates and what you should be paying attention to
Yep.
in those news headlines to try and make your decision a little bit easier. But as we move forward with the episode, like Jameson said, we brought Colin on because he does this every day. He's written many loans for each of us and other realtors.
I thought you could say many books. I was like, wow,
leather bound.
Not yet.
Leather bound.
Leather.
Not yet.
impress me every time I talk to
I
you.
keep them all on the bookshelf. None of them are published, but yeah, lots of books.
They're there.
So
I have a
Colin-
semblance of books.
what I want to do first is kind of let's go through kind of the how, right? So if somebody is looking to refinance their home, what are the
Well-
first steps?
Well, I mean, I think the why, right? Why should you refinance?
Well, and we'll go. That'll be part of kind of like
Okay,
the
okay.
the end, and we'll bring it all together. But
Okay.
let's kind of walk them through the process. So
Yeah.
somebody sees a news article that says interest rates are coming down, and they go, "Oh wow, I got a really high interest rate on my home. Maybe I should refi." where do they go from that point?
Yeah. So the first step of the how is a phone call. And it's calling your trusted lender or somebody that you know, somebody that you want to kind of go check out, and get the process started. A lot of the refinance process is going to be very similar to buying a home. You're going to have your documentation and stuff that you're going to need to get together, like income docs, bank statements, a lot of the standard stuff that you did the first time when you bought the house.
Credit report.
Yep, credit report. We're going to pull credit depending on the situation, and we start to go through just what does your specific situation look like, and does it make sense for you? We run all the numbers and documents behind the scene. As we get everything up front, there'll be a bunch of different stuff that maybe we call back and say, hey, we need different documentation additional to research to make sure that we're getting you guys the best deal that we possibly can, and just make sure we're going through the qualification.
Now, can you go over a few factors that may differ from the purchase of your home, which are the LTV, DTI, loan value, and debt to income?
Yep.
Do those ratios change when you refi?
Yeah, so loan to value and debt to income.
In comparison to the purchase side.
Right. When you first bought your house, your specific financial situation may be different than when you're going to do a refinance. So one of the things that we're going to look back into is where your debt is compared to what the new loan's going to look like. So if we're just able to save you, we'll use just flat math. If we're going from a 6 or 7% to a 6%, now all of a sudden your debt to income when you originally bought that house is going to be less because your mortgage is going to be down. But what different things have you put yourself into as far as like where your credit cards are, if you bought any new cars, if you have different things that are showing up on your credit report as far as monthly numbers and monthly debts that are coming out of your life, and then comparing that against your income. That's where the debt to income portion of it. And then your loan to value is saying where your loan was and is compared to the value of your home. And that's going to be different from when you originally bought, because maybe your house appreciated, depreciated, stayed flat, whatever happened. We're going to compare those numbers of where the new loan's going to sit. If there's going to be any extra, like if your loan amount's going to be maybe a little bit higher because you want to roll in some of those costs of the refinance into the loan, and then just make sure that we're sitting in whatever that area is, because a lot of first-time home buyers, they only did the minimum down payment that they could have possibly done, and you're going to have things in there like mortgage insurance, depending on the type of loan, whether it's a VA, FHA, conventional. In a conventional, you have mortgage insurance when you come up to 20% of loan to value, and maybe you've hit that point and your house is appreciated and now you're at that 20%.
So is it at the 80 or the 79%?
It falls off 79% automatically if you don't do a refinance on a conventional loan. And you can refinance it off at 80. So the 79% is kind of a 1% gap that they do between the 80%. But if you do a refinance and you are at the 80%, or maybe you want to come a little bit money out of pocket, then just to get your 80%, it's gone.
Cool.
And it won't come back unless you do a refinance.
Does USDA have MI?
Oh no. Does USDA have MI? I think I just got asked a question that made me just blank on everything.
And that's okay. I kind of blindsided him. And the reason I ask is they've updated their map, I think, too, here in Colorado. Yeah. And there's it's USDA is a rural loan, and their LTV is higher, and there's a little more possibilities for first-time home buyers that want to buy out in Strasburg or Weld County. Yeah. And I deal with
Hugo.
I don't know if Hugo's in there, actually. I think Hugo's not listed.
We got to check that, because if you guys are longtime listeners of the podcast, we do have the king of Hugo real estate right here. He has sold 2 or 3 houses, which, fun fact, is 80% of the real estate in Hugo.
Oh, man. But, Colin, no, I like what you said, kind of,
true story.
Is the point where you said, you can get all this information together, but you want to come up with a plan that's specific for that individual, for that specific loan, right? Mm-hmm. So one thing that I do want you to go over and I want to touch on is, I know before I got into real estate, when I thought of refinancing a home, I went, oh, I'm just going to refinance. Cool. I just redo my loan. But there are multiple different kinds of home refinancing. Yeah. So can you kind of talk about those a little bit?
before you get into that, we as industry folk know what it is. And this is not downplaying the consumer. I'm not testing anybody's knowledge, but I've received phone calls from clients that have asked, how do I get my equity? Who do I call to get this money out of my house? They think
Have you not seen the commercial?
it's
You
just like
knock
money.
down the walls, bro.
Yeah, it's in your walls. You just get it, right? So this is what we're talking about. This is how you tap in and you access the equity of your home.
Well,
And
when
I've had
when we say access equity, I think it's important to distinguish. We're talking about leverage, right?
Yes, it's not really actual factual money that you have in an account that it's being held for you. It's the appreciation of an investment that you've made into your home.
So basically, guys, equity, just to break it down as simple as possible, you bought your home at $200,000. You've been in it for 3 years. In those 3 years, the market around you has grown. Your home is now worth $230,000. So
you've paid down your principal.
And you paid down your principal, and now your equity is $30,000. You bought it at $200. It's worth $230.
But
you have that $30,000 to play with.
But all that means is that you don't have $30,000 in your pocket.
No.
Now you can use a financial institution to lend against your property at
Correct.
a lower interest rate.
All right, so Colin, get us into the different kind of refis that you see, the main ones. Obviously, there's a list, but let's do maybe the top 3 that you see.
Yeah.
Go on vacation.
Your big things are gonna be almost siloed into 2 brackets on every loan, and that's gonna be whether you're doing a cash out refinance or whether you're doing a rate and term refinance, and both of those are correlated to conventional loans. So a rate and term refinance means you're just changing the rate and the terms of what your current loan is now. So again, you're going from a 7% to a 6%, whatever the math is or numbers are. Then you are not pulling any equity out. You are just doing it to change your monthly payment and change your rate, change your terms.
Now, some of the fees that are associated with that will go into the loan, right?
Mm-hmm.
So you're not paying out of pocket.
No, well,
Some
Depends.
depends, right?
yeah, and I guess I'll just touch on that real quick. If you do a refinance and let's say you did your 3% down and you were at your lowest that you could have done and your house hasn't appreciated at all, well, you can't roll those fees into the loan because
That may be
your
out of
loan's already at its end.
So what does that
meeting
LTV
point.
look like?
So it
90%,
depends.
95%?
Yeah, it depends on the loan. So 95% is going to be your standard unconventional. But then you're going to run into things too, like maybe you were at 80%. And if you roll these fees in, now you're going to be at 81% and your PMI is going to come back. Or your
Now, the
private
percentage
mortgage
we're
insurance.
talking about is the amount your house is worth versus the amount that you owe.
Correct.
So it's 80% of what your home's worth you owe to the bank.
Yeah. So if my quick math was better, I would tell you that 20% on 500,000 is. I'm waiting for the audience.
100,000.
The audience is thinking. 100,000 is 20.
Yep.
Bang! Look at that. So, if a $500,000 loan or a $500,000 purchase price or house appraised amount, then your loan's going to be at 400,000. Then that means you're going to be at 80% loan to value. So there's going to be a lot of different situations and stuff where you're going to want to maybe roll in those fees or maybe you want to come out of pocket, but a lot of that stuff is going to be just kind of depending on your situation,
Yeah.
which is what you're going to
And
get
that's
with your
key.
lender on.
I was going to say, you need to call Colin because it's going to be situational.
Mm-hmm.
If you're long-term in this home, yes, right? If you're at that small marginal,
Mhm.
you're going to save maybe $100, $200 a month. Is it going to make sense to roll your fees in if you can or pay out of pocket?
Mhm.
Only if you're long-term.
Yep.
If you're going to move, say in a year or two, this might not be the best bet for you.
Yeah.
Well, let's clear that up, Colin. So I'm going to ask you this, and this is for people that maybe have either first-time home buyers, haven't bought a home yet but are looking for it. When I refinance, the rate and term, right?
Mhm.
So let's say I bought the house at 7%, rates dropped to 6%. I want to refi. I've been in the house for 4 years, right? When I refi, right? When I bought the house as a 30-year mortgage.
Mm-hmm.
When I refi, do I now only have to pay 26 more years?
No, you're gonna, depending on
Reset.
the situation that you want to
Reset.
do, you're
Or
gonna reset.
15 years. You could
Yeah.
do a 15-year loan.
Right, but I'm saying if I
Payments can go up. Right.
change the rate and term from a 30-year to a 30-year, you don't. It's not like getting credit for time served in jail.
No.
Just throwing it out there.
Yeah.
Right? Financial jail.
Yeah.
Brought to you by
But people have to understand that, and I bring this up because Oscar just made a great point. Right, it depends on what your long-term goals are, because when you do a refi at a 30-year term, you're signing up at a lower rate for 30 more years,
Yeah.
and the clock resets to zero.
Well, and to that point too, you don't only gain equity by your house appreciating in value. You also gain equity because you've been making your
Mhm.
mortgage payment, and your loan amount has been slowly dwindling
Correct.
because you're making your
Yep.
payments. So yeah, the longer you're in your loan, the more that you've paid towards it, the more equity that you now have. You can also get extra equity by the house appreciating in value, depending on the market.
Mhm.
So there's a lot of different things, and I say this every time I'm on the podcast. Situations are situational, and that's why you get a hold of us to
Well,
kind of run through those.
And not
situations
only
with you.
that, it's funny because like I've had friends that watch the podcast, right? And to
Mhm.
all our listeners, to all our viewers,
Wait, people are watching this podcast?
Yeah, right?
Shit.
Lots.
We have a
Um,
live studio audience today, actually.
Yeah.
Hey.
The reason I bring it up is because, guys, as we're throwing out all these numbers, as we're LTVs, FDIs, 30%, 80%, I can feel your eyes glossing over and your ears shutting
I
down
don't
and
even
you
know what
looking
an
down at your
FDI
phone.
is. He threw out
Right.
an FDI.
Right? I can feel it. I can feel it. You guys kind of tuning out, slowing down a little bit because I would too. But this is why it's so important to have a good lender in your back pocket. Notice what Colin just said: is situations are situational, right? So you don't have to know all of this
Or
up front.
memorize this.
Yeah, you don't
That's
have
what
to
we're here
memorize
for.
it. Have it in your back pocket. Reach out to Colin. Reach out to any preferred real estate agent or realtor that you know has good lenders. One of the three of us, please. But
Preferably.
that's why they're there. You don't
Please.
have to bore yourself with all of these numbers. You don't have to bore yourself with tracking mortgage rates, any of that. You can just pick up the phone and call a lender. And lending, as I've said multiple times, to talk to a lender is free. You can pick up the phone and call them and talk to them and ask them questions. It's not like a
Hell,
lawyer.
talking to a realtor is free.
Yeah.
Yeah.
If they're charging you, I mean,
Yeah, that's a whole other story.
That's
Yeah,
another
we got story time coming on those things.
That's a whole
Dilfs
different
and
thing.
dinks. I'm just saying.
But so let's continue with that conversation, because Colin broke down the rate and term refi.
Yes.
Okay, your other bucket was what?
Cash out refinance.
So go through that real quick.
So on a cash out refinance, you will still be changing rate and terms, but instead of only doing rate and term, you're also going to be trying to accomplish one thing, which is cashing out some of that equity that you might have in that house, and whether that's to
What can they use that for?
pay down debt, do a house remodel. You can really do it for whatever you
Midlife
want.
crisis Corvette.
Yep, if you
Just
so
saying.
choose to do that.
Not the best idea, but-
If you guys aren't watching the video, Colin's financial mind just took over and he just winced a little bit.
yeah,
Better idea: buy a rental property.
Yeah.
Go on vacation.
So let me ask you this, Colin. So
Go to
Oscar,
Vegas.
Oscar made a good point, right? He said people always want to ask. I've been in my house for 5 years.
Mhm.
I've got $100,000 in equity.
Mhm.
It's like a JG Wentworth commercial, right?
Give me my money.
I
It's
want
my
my
money and I want it now.
Mhm.
So if Oscar's client were to sell his house, okay, and he gets that equity as a check at close,
Yep.
then that's it. He's got that check. He
His
can use that
money.
for whatever he wants.
Mhm.
However, let's say he wants to do a cash out refi.
Mhm.
A lot of people, I think, assume that when they do a cash out refi, they're able to just grab that money, use it for whatever they want. And if I pay $100,000, that's it. That's not how it works, right? If I take $100,000 in equity, do I pay interest on those payments? How does that work? Like,
You
it's
gotta
not
understand.
as simple as just taking.
We understand it, but this scenario right here is so important for the
Right.
consumer
Yeah.
because we see it as common knowledge.
Correct, and it's
But
not.
this is very, very important that this be conveyed as clear as possible. It
Yeah.
is not money that's
so no pressure. Educate the people
educate
and do
the
it
people,
well,
please.
right now.
Yeah. So doing a cash out refinance, you're pulling out money out of your equity of the home. But what that means is you are now rolling whatever you cashed out into that loan moving forward. Now, it's not, people talk about high interest loans and different stuff that you can go get a loan for a bank, a personal loan. And if you have equity inside your house that you need to or want to tap into, you can do it, and that's some of the lowest interest rates that you're going to find because it's tied to a asset, and the asset being your home that you live in, and you have a lot of reasons to make sure that that asset just doesn't go up in flames. So they
unless it actually goes up in flames.
yeah, and then
Or you
Wild-
live in
insurance,
Western North
wildfires,
Carolina
or you're in
and-
Florida and
Yeah,
it
yeah.
gets flooded.
and you didn't plan on
hurricanes.
Hurricane.
hitting the mountains.
That's a great distinction, right?
Mhm.
So Colin made a great point. And this is what
Crazy.
we preach all the time about home ownership and why it is so important to understand that if you can get into owning an appreciating asset, you can leverage that asset, right? Because Colin just said, let's say, for example, you have what, $50,000 in credit card debt.
Mm-hmm.
Average credit card debt interest rate right now is 21%, 25%,
21 to 30%.
something like that.
Crazy.
So I can go to a bank, right, and I can pull out, if I qualify,
Mhm.
$50,000
Mm-hmm.
as an unsecured personal
Loan.
loan.
Yep.
The problem is there's
22%.
nothing to leverage that against. The bank has less.
They have no way to protect.
They have no way to
themselves.
protect themselves, so
they
they
can't
charge
come
a
take
higher
it out.
interest rate. Versus if I have a home and I want to pull out $50,000, but it's against a secured asset that I have been making payments on, right, for 4 or 5, 6, 7 years, you're going to get a lower interest rate to borrow that same amount of money. So
the easy way to look at that is if I come to you, Jameson, let me borrow $500K.
fuck no.
That's exactly what it is.
Wow.
Now,
I
if
didn't
I
know
say,
we were
Jameson,
bad friends here.
let me
I
borrow
don't know.
500K,
Donald
but you
Trump's
get
been
to
experiencing
hold
a lot of
my
that.
Ferrari.
Maybe.
Okay, see, I got a maybe.
Hey.
So, okay, we don't have Ferraris or
How
anything.
many miles it has on it?
2.
All right, done.
I've looked at it once.
Wow.
So
I looked at
so
the
you're
section
you're
on mine.
giving up collateral,
Yes.
and you're not just saying, "Hey, give me the money. I may or may not pay you back."
Right.
Now, if you have my collateral, I'm going to make sure I pay it because I want my collateral back, right?
Mhm.
That's kind of how it works with your house. You're putting up your house. All right, it's probably not the best example, but it's like bond, right? You can put your house on bond. If you don't go to court, they put a lien on your house. It's kind of what the bank does, right?
Well, think about it this way. Let's say you have two scenarios, right? You pull $50,000 from a bank as a personal loan, and you pull $50,000 in a
So that's
Cash out
hold on,
refi
that's
or,
what I wanna
or
do.
HELOC.
Well,
'cause
that's what I wanna
that's
do.
what I
So-
want to ask.
Colin, real fast. What on average right now? What would you say is a refi interest rate?
You're somewhere in the 6s.
Okay, so let's go high. Let's do 6.8.
Yeah.
Yeah?
6.5.
Okay. All right. So, Jameson, now you can continue.
Now, hold on. So
I feel like I'm not going to correlate with what you're saying, even though we're usually really good at this. My point was this and why there's a risk involved. Banks want to mitigate the risk. So if I pull $50,000 in a personal loan from a bank versus $50,000 in a cash out refi from a house, and let's say I decide something happens and I declare bankruptcy, right?
Mhm.
If I declare a Chapter 7, do you know what gets wiped from my record with zero penalty? The $50,000 from the bank.
Mhm.
They just don't get their money anymore. And they have an insurance policy to cover themselves, but they're going to charge a higher interest rate because of that.
Charlie,
if
can
I
you throw up
declare-
the disclosure? We are not CPAs. We are not
No,
bankruptcy-
but I'm just saying, as
bankruptcy attorneys.
my
But
point
no,
is,
you're
from a
right.
Chapter 7 bankruptcy, if I have a bankruptcy and I have a $50,000 cash out refi that's tacked onto my home loan, that is not, that money is not forgivable, right? So you get a lower interest rate because it is protected. I can declare a Chapter 7 bankruptcy. I still owe that $50,000.
Right.
I declare a Chapter 7 bankruptcy and I have $50,000 in a bank loan that's unsecured. I don't know that anymore. I can wipe it.
Now,
Well,
now let me tell you why you should call Colin right now, because I've been a big advocate of HELOCs.
Mhm.
Colin, you don't do HELOCs or seconds, right? Just straight mortgage.
You do
Yeah,
HELOCs.
I can do HELOCs.
Well,
Not
if
seconds,
you could
though.
do HELOCs, but
Not
I've been
seconds.
pushing HELOCs because the rate has been okay. What's a HELOC? It's a home equity line of credit, so you don't have to tap in if you have a good rate. Right now, I tend to calculate blended rates. You have your mortgage. You do a HELOC. It might be less right now because rates are dropping. Maybe a HELOC is not your best bet because you could pull a little bit of cash out, still drop your mortgage if you have a better rate at 5.5% or 6% when they get there. We're talking about, we're not going to say that we're there yet, but maybe 6.5 to 6. The people that bought at 8% or high 7s, then they need to tap into their equity. Maybe a HELOC will be a little bit higher than if you do a cash out.
Yep.
Because you're still amortizing it for 30 years,
Mhm.
and your payment will still be lower, maybe $100 more, but it's calculated It's a different vehicle to tap into your mortgage, but I think now a cash out refi will make more sense than if you do tap into a HELOC.
Yeah,
because
for sure.
rates have dropped.
Right. And again, situational. If you're at a 3% interest rate, I would probably still tell you it makes way more sense.
To do a
Depending,
HELOC.
again, even that, depending on the situation, there's, I've seen some
HELOCs only go
few-
80% LTV, a lot of them.
Right.
Not a lot of them go 90.
Right. And I've seen some situations where even some of those people that were sitting on those super low interest rates, it made more sense for them to do an actual cash out refinance. But typically, I would tell you that HELOC makes more sense. And a lot of the stuff is too, I will give you the best advice, and hopefully you get that from maybe whoever you're talking to. That makes the most sense for you, not what makes the most sense for
Financially
my
pocket.
bottom line. And just because I don't ever want to feel like you're being taken advantage of, or I'm taking advantage of you because maybe I make a couple more bucks out of it. Because I want to keep you forever, and
Stalker.
make sure to
Right? Jeez.
give you the best advice down the road, because we're going to grow old together, and I don't want that to be creepy at all. But
I like.
I'm
I'm gonna
non-committal.
do a slow zoom
I don't
on your
know.
eyes
I'm-
when you say that one.
yeah, I made sure to really look at that camera.
Stay
Um,
tuned for
so-
the Notebook remake starring Colin Keenan and any of his clients.
So one thing that I want to do, so just to give you guys an idea, when we talk about as an example, right? Because I want to give you a tangible, real life example of what we're talking about with if you do something like a cash out refi and you're making your money, leveraging your money, making it work for you better, right? So to Jameson's point, when you go and you get a private loan from a bank, as of right now, the average percentage of interest, like we said, I did 21% on this calculation
Credit cards.
for credit
For
cards.
variable credit cards.
Yeah.
Yes.
Yeah.
So you get
That's
a
probably even
$50,000 line of credit on a credit card, you're getting 21% interest. Okay. So what that means is when you first sign up and you get that 50,000 with a 21% interest, that means that automatically you get $11,000 added to that loan on top of it, because you go from 50, then your interest, you got to think over time, your interest is at 20%, you go up to $11,000. Now, if you do that on a cash out refi and you take, again, we have the amount of 50, but you have an interest rate that sits around 6.8%, that's only an additional $3,400. Okay. So when you think about, and the reason I bring it up like this is because I want it to be easier to qualify. So on a bank loan, and again, guys, this is as basic as I can get. This isn't like financial advice. I'm just trying to paint the picture for you. On a standard bank loan or a credit card interest at 21% on $50, that's $11,000. If you do
50,000.
it's $11,000 interest on $50,000. If you do a cash out refi on $50,000, again, quote unquote, then you're looking at around $3,400 out of that 50.
And then there's ways to manipulate that
Exactly.
even
Exactly.
further.
Can I
And
correct you?
again, if you're slapping out you're using the money all up front, depending on if you're doing a HELOC or not. A home equity line of credit works like a separate bank account, right? You're going to pull the loan, and then if you don't use it, you're not paying anything on it. Use 20,000, then you're only paying 20,000, and it's usually around 7-8% right now,
Yeah.
roughly.
70, 80, yeah.
Yeah, and then if you do a cash out, then it just stays, right? And you have the money, use it all, use it not. It's going to be one payment through your mortgage.
Mhm.
So that's when you call Colin and see which makes more sense to you.
Mhm.
Have him give you the options.
For sure.
Go for it, JMO.
Well, so I want to make a distinction, right? Because I think I don't want to convolute the information. However, when you're talking about the 21% on average, that's for variable credit for like credit cards,
Yeah,
right?
different
If I
variable.
were to take a personal loan via Lending Club or anything that you get shit in the mail saying, hey, you have
JG
debt,
Wentworth.
work with us, right? Like people know that. Those rates are closer to like 8 to 10%.
Mhm.
But the point is, and the reason they're lower than the credit card does, because their whole selling point is, hey, you owe $30,000 in credit card debt at 21%. We'll give you $30,000 at 11%, and we'll consolidate it, right? Bank loan, same thing. They're 10 or 11%. So the number's not as drastic. However, the point being is at a bank, if I go to get a personal loan from a bank, they're going to charge me a higher percentage than if I take that personal loan from myself and my own asset.
Yeah.
And that, I think, is the distinction that you want to make. The second distinction I want to make is between something like a HELOC and a cash out refi. there's a difference as far as I understand it.
Mhm.
HELOC is a variable line of credit, which means that that rate that you pay back on that HELOC fluctuates based on the federal fund rate, which is what you're tuning in for because the Fed cuts rates and blah, blah, blah. A cash out refi is not variable.
No, it's a fixed
It's
rate.
fixed rate. So it depends on what the goal is. The HELOC is a bank account you can continue to draw from for a period, only paying interest, and then
It's
got
usually 5
payments.
years, and then
right?
you got 15 years to
A
pay it
cash
back.
out, but that payment can vary based on what interest rates do.
Mhm.
So it depends on where we're at. A cash out refi gives you that lump sum, folds it into the loan, but then that percentage stays the same. So that payment
Is
on it is never going to change unless you refi out of it. Is that
Right.
fair, Colin?
and you could take those 50,000, put them all on
Correct.
black if you want.
So again, it just
It's your
depends,
money.
right?
Yep.
If I'm shopping Lending Club and they're offering 8% and my mortgage is offering 4.5%, 5%, 6% on the same idea, and I can utilize my equity in my house to pay off my credit cards and have a singular lump sum payment.
But
Again,
again, this is why financial literacy is so important.
Yeah, because it has to make sense, right? Because you're amortizing something for over 30 years. That's what my biggest gripe is: people that refinance to pull out cash to pay off their cars. Well, that's a depreciating asset, your car, right?
Mhm.
Once you drive it off the lot, it is worth substantially
Right.
less. Now you're going to take that 5-year loan and pay it off, and you're going to amortize it for 30 years and pay on it for 30 years. That's when you have to call Colin, so Colin can knock some sense into you and say, hey, that's probably not a good idea. Let's just figure something else for you.
Yep.
He's a
All right.
financial expert. He deals with this day in and day out. He's gonna say that's probably not the best bet, but if you want to do it, I could be the person to do it for you.
Yeah.
So I Colin, I'm going to say it like this because I want to make a definitive point on with this. Okay. So we've gotten to the point where, hey, I saw news articles. I know I should be refining right now, or at least it seems that way. They've called you, they've talked about it, they've given you their financials, their DTI, their credit card information, 401ks, whatever it may be, and you went through and decided that, hey, a cash out refi or a rate to term loan would be the best option. So what happens after that?
Now we start talking about what that's going to look like long picture. In a refinance, there are fees associated with, and so we start to go through what those fees are, whether people have processing fees, underwriting fees, whether
Appraisals.
there's whether you have to do an appraisal, or there's any title fees depending on what the situation was. There starts to be things that start to roll back into doing a refinance. There was a time where New American, or my company, was doing, if you bought a house with us, we covered all those. And depending on who you guys did loans with, whether or not some of you guys will incur some of those. But now we start to make it a math equation on what makes sense. Some people, it's, hey, I bought a house with minimum down, and I want to save more on my monthly payment. Okay, well, your house didn't appreciate a ton, or maybe it went backwards, and you did pay some of your stuff off, but it doesn't really make sense to roll those fees, or you can't, depending on the situation, roll those fees into the loan, and those are going to have to come out of pocket. But a lot of that stuff starts to come into, we give you the numbers, we give you hey, what's the end result, maybe a couple options, and then let you guys start to make some of those decisions for yourself. Sometimes I'll even advise people like, hey, rates have come down a little bit. You could do a refinance right now, but it probably makes a little bit more sense to rate until we get some more of these rate cuts or different big headlines that start to move the numbers on
This is great, Colin. You're leading into it. You're going
Yeah.
towards that route. And the reason that I positioned the question like that is because you're doing all of this, right?
Mhm.
What you just said, you're looking at the rates, you're deciding if it's a good time. So what you have to do during all of this, once you've gotten past getting Colin all the information, once you've gotten past deciding which refinance you're going to take, they're just waiting for a phone call from you, right?
Mhm.
And you're doing all this back end research, back end looking into their finances to see if it's viable. So the reason I bring it up like that, guys, is we stare at financing, we stare at refis and mortgages as a mountain, right? We're scared to go into it because we're standing at the bottom, we're looking up at the top, which is owning a house or refinancing your mortgage. And a lot of the time we get we get scared and we slow down because we don't want to walk up that entire mountain. But this is the reason that lenders are here. So if you have questions, if you're seeing these news articles, again, reach out to a lender, because it could just be a phone call. You provide them with the information, and then you get to sit back and truly think about if it's a good enough idea for you. You don't have to worry about, oh, well, what are they going to do? Is this a good time? Should I be, what does the trend say? That's exactly what the lender is there for. So that's the reason I position the question like that, is once you get through the initial aspect of it, your lender takes all of the weight off of your shoulders and just becomes a guide and a friend to you to make sure that you're making the best decision.
So
No.
so if buying a house or refinancing is akin to hiking Everest, Colin is your Sherpa.
Oh, yeah. Sherpa Colin. I love it.
Sherpa Colin.
Sherpa
Now, Colin,
He
Are
may
you
die
how-
on that mountain, but God damn it, he'll get you to the
He'll
summit.
get you there.
are you held to Privacy Act, right? If people give you the information, are you going to sell their information on dark web?
No.
What about the light web?
No.
Any web.
Never.
Spider
no.
web?
Give him the
Charlotte's
information.
Web.
Let him pull your credit.
No.
Let him give you a scenario. He's not going to go out and buy a car with your social.
No, just like
No.
just like
He
us,
will
right?
go to
we're,
jail.
We're tied to fiduciary duty
Very
to our
much so.
clients. They are as well, based on the Frank Dodd Act and a lot of other different transparency acts that have happened since
It's
2008.
safe to call Colin.
It is safe to call Colin.
Yeah. I am licensed by the federal government to handle that information.
You're fed.
Yeah. I'm a fed.
Watch,
Get
what,
outta
watch what
here.
you say.
Yeah, take it easy.
No,
boys.
and
Take it easy.
Colin, I think that,
Take it
I
to
mean,
jail.
obviously, guys, if we've gone through this in about an hour, and we could break it down even more. We can go through way more, but we wanted to give you an overview. Yes, we went in depth on some things like DTI, on the different, loan to value ratios, all that kind of stuff, interest rates. But now what I want to do is, Colin, like I said, you stare at this stuff literally every day. And Colin, you guys can't see it on the video right now, but Colin has up a rendering basically of what he follows, the graph that he follows to show what mortgage rates do. And if you're watching the video version or you're doing the audio, check out the video version. I'll throw up the chart on the screen just so you can kind of see what Colin looks at every day. But Colin, there are so many factors that play into interest rates, into home mortgages. So what I want to do is, can you just fire off some of the main elements that you look at? I mean, when you got here, you were on a weekly call with your team, right? That was going over some of these things. So can you go over just some things that the viewers and the consumers should look at in news headlines specifically that they should monitor in order to kind of gauge whether or not it's a good time?
Yeah, so a lot of the news headlines will be, how do I say this, directionally accurate. Don't necessarily watch everything and you see and then believe it, but use those as trigger points to reach out. So maybe you see something that rates have fallen out of the skies and we're back in the threes. I'd tell you it probably makes the most sense to not believe that, but maybe make a phone call and reach out to your mortgage lender of your choice, preferably Colin Keenan, New American Funding, 720-202-5399, or whoever you want to talk to. Because what we're going to do is tell you, hey, find out what your situation is, see what makes the most sense for you, and then also just give you advice on what's going on. But every single day there's something that comes out or headlines that move the market, and how mortgage rates act differently than any other rates. And I know we've talked about this before, but it's based off buying and selling of mortgage bonds. And just like the stock market, it reacts to different things that are happening in the economy, different things that people are saying by your Fed chairman and different Fed members, different inflationary metrics and reports that come out once a month. But there's a lot of different things that move the market one way or the other, for the better and for the worse.
All right. So can you give me 3 big ones?
3 big ones. Anytime there's a rate cut. Rate cuts do not mean that mortgage rates have been cut. However, they are signs of that things are getting better or worse. Recently, we just had a 50 basis point rate cut that specifically impacts things like credit cards, car loans, and different stuff. What it doesn't do is 50 basis point rate cut does not mean that the mortgage rates got reduced by 50% or 50 points. And a point is a percentage. We'll go further into that.
Points, bips.
Yeah.
lot of
basis
terminology.
points, all the whole thing. But what it does mean is the government is reacting to inflation. And they see specifically right now on that 50 basis point cut that we just had, that inflation has been stubbed, has been slowed, has started to kind of make that turn over the mountain and starting to walk down. And so now what they're going to start doing is doing rate cuts. Now, what happened specifically was we had a 50 basis point rate cut, and over the last 2 weeks, rates have actually gone up. And there's been a couple factors in that, and one being Powell came out and said, the Fed chairman, that don't expect this long term, don't expect this to continue happening. So what happened? A lot of the stuff was, as far as the rate cut, was already built into the market, and a lot of those gains had already been seen, and rates came down. And then what happened was a headline then came out, and then the rates started to go the other way. So that's one big thing that starts to happen. Another two big thing is inflation reports to show that inflation is getting better. Inflation is mortgage rates' enemy. The higher the inflation, the higher the mortgage rates. As things have gotten more expensive throughout, I'm sure that everybody's seen, mortgage rates have gotten more expensive. Those have kind of been synonymous with each other. And now as inflation starts to go down, interest rates will start to go down. So inflation reports are another big measure of where mortgage rates are going to be heading and where they are now. Another big thing, and I'll give you my third, is job reports, and where the job market is also inflationary. So everything's going to be tied into the number one thing, which is inflation. But the more jobs that are created means that inflation is stubborn, and inflation hasn't really impacted the market. Unfortunately, when there is a job loss, that means that inflation is starting to take its hold on the economy. And the more job losses that there are means that inflation is going to, or is going down. So as crazy as it seems, when there is a good jobs number, that means that inflation is strong and rates go up. When there's a bad jobs number, that means inflation is affecting the market and rates go down. So those would probably be my top three things that I would tell
That's
you.
perfect. That's perfect. And so just to kind of recap, if you are a consumer and you're sitting there thinking, oh, should I refi? What Colin's saying is the three major things that you should look for in news headlines are Fed rate cuts, unemployment reports, and inflationary reports or inflation reports. Mm-hmm. And those three things, if you look at the headlines and you see inflation report and you click on it and it said, hey, the inflation is going up, then you go, oh, maybe I should talk to my lender. Or unemployment has dropped, maybe I should talk to my lender. So those are just factors that you should consider if you are thinking about refinancing your home.
Can I take it one step further?
Or if you're bored and you want to have a little bit of fun, check out what the inflation rate is doing and then correlate that with what interest rate is doing and see how that kind of, like you said, it goes hand in hand.
Yeah. Can I take it one step further?
Yeah, absolutely.
Right? So we talk a lot about inflation, and there's people that are educated in that, and there's people that are not. So for anybody that's wondering what inflation is, the base, most simplistic definition I can think of is when you have too much money chasing too few goods. Mm-hmm. That's literally it. It's supply and demand economics, right? And the reason that unemployment is such a significant mark of where inflation is going, and why when we see unemployment decrease and job reports come back positive, it tends to increase inflation. And this is going to be so counterintuitive, but I swear to God, it makes sense. The more people that have jobs means there's more money getting pumped into a market with fewer goods. Mm-hmm. So as people gain financial stability, they tend to spend money. That's just what it is.
And I think,
I think right? Here, let's go straight like caveman. Money good, interest rate bad.
Yeah.
Like
so that's what it comes down to. When people have more money, they spend it. And when they spend money, then companies understand, okay, well, people are spending money on goods. I can now raise the price to a certain point until they stop spending that inflation, money, right? And that's what inflation is at the point. And from a Fed standpoint, I'll let you go in 2 seconds. From a Fed standpoint, they have what's called a dual mandate, okay? The Fed, and that's what's our Fed chairman's name?
Jerome Powell.
Good old Jerome Powell, right? The reason that his words mean so much is because the Fed has two mandates, and they're opposing mandates. They want price stability, but they also want maximum employment. That is their dual mandate from Congress. They want to keep unemployment low, but price stability constant.
Mhm.
And as unemployment goes down, prices tend to go up. So there's this game that they play with the federal fund rate to try and keep them as stable as possible on both sides. So that's why when Colin says, hey, if the unemployment or the jobs report comes back strong, that means that we added too many jobs, which means that companies had the capacity and the funds to hire more employees. Well, as more employees get hired, they then turn around and they spend money on goods. Well, as they spend money on goods, that means that prices get increased by those same companies, and you turn into this cycle. Right?
Real estate served on the rocks, bringing you economics.
So
Right.
we're just
And-
it's
and
econ 101.
that's when I'm like,
but yes, I know
because-
it's econ 101, but it's important to understand because people
Right.
assume, well, if the job report is good, that means the economy is good. The economy is running too well, which is why the things that you're purchasing are a
So
higher
expensive.
price than they were previously. And that is why when investors look at that, as inflation increases and unemployment decreases, they're moving away from the high risk, high reward, aka mortgage, and they're moving into treasury bonds. And that's what's moving those interest rates up and down.
So it's a big machine, right? And
Mhm.
all of this is just a bunch of little cogs. My biggest gripe with that is I think the job security is probably one that we should look at better than the unemployment because the unemployment is very subjective.
Agreed.
Because there's a broad range of unemployment, right? There's retarees,
Yep.
there's underage, there is a whole broad spectrum of
Sure.
unemployment
Model.
is looked at people that applied for unemployment. That's how you could. That's the only way you could calculate that in. Whether I'm wrong or right, please fact check that. But when the economy started being the bigger factor during COVID, I kind of geeked out and I straight up got everything from economics for dummies to back shit that I had in school and just dove into it, right? And while I'm driving, I'm listening to one and I'm going home and cross-referencing. So I am no economic expert, but that was one of my biggest gripes, that the unemployment was so skewed that we need to look at job security, not unemployment, and then base it off of that. And that was my biggest thing. Like I feel like the feds were looking at an antiquated equation to try to fix a modern problem, especially with the dark horse called COVID.
Yeah.
And that's where I kind of like, no, it's not working. Stop fucking with the real estate because it's not working.
Yeah.
Because when they hiked the interest rate to 8, they thought they were going to put a stop to it. It didn't. We were still selling.
Yeah.
well,
So it just threw a wrench into the machine.
and the wrench is this: human behavior and psychology. That's all it is. And that's
Yeah.
why when Charlie asked the question, hey, Colin, what are the things that you want to pay attention to as a consumer? If you see job reports coming back weak, just understand that that usually means that coming in the near future may be a rate cut. If you see inflation coming down with unemployment going up, that usually means you may see a rate cut. And the reason I bring that up is because the mortgage rates don't react on the rate cut itself and the events. They react on the information leading up to the rate cut. So the whole idea, and I think Charlie, this is where you're going with this question, was what can we pay attention to as consumers? Pay attention to the inflation report and the job report. If you see a negative job report and positive inflation, you know that in the coming weeks, the Fed's
Yes.
going to probably do something that's going to cut the rates. Get ahead of it by calling your lender now, because once the rate cut actually happens, all of the prices have already been built in and there's not a benefit.
Well, and
Now-
go
Go ahead.
You'll go for it. Austin.
Just, and you may or may not know this, and this is just hypothetical, and my brain's just, the cogs are going. Do you see what correlation between the income, your average income of your consumer, and where we are with home pricing? Has that caught up, or it's still very lopsided? Like it's super expensive, but hyper locally here in Colorado. Has that caught up a little bit, or what are you seeing on your end?
Yeah, it's been out of whack for a minute, but the problem and the reason why, like you said, houses continue to sell was we had this massive jump in home prices, and then we had another massive jump in interest rates. So what those two combined thing is, your mortgage payment just to get into a home was high, or much higher than anything that it's been in the past. And the crazy thing is we were still selling homes. We were still getting people in the homes. We were still qualifying
Well,
people and whatnot.
And that's where migration patterns come into play. But again, it's a
Right.
human element, right? There's as much as, and again, Jameson said it last week and every other week, it's time in the market, not timing the market. It's knowing these factors and having the information to prepare yourself is great, because you're going to be ahead of somebody who's not paying attention to those things. But Colin can't sit here and say, I know exactly what's going to happen. Top economists can't say that they know what's going to happen, because we are the biggest variable. We make the decisions or nature, right? What just happened with the hurricane currently going on in Florida, Helene just happened. Those things are nothing that you can take account for. So it's just preparing yourself with this information and knowing enough to just know when you should pounce. And Colin, you brought up and we've been kind of touching on it, but you brought up a great thing earlier in the episode when you were talking about watch the news articles, because not all news articles are going to be fair.
No.
And one thing that I do want to touch on is, and I don't want to go too deep into it, because obviously we can go a whole
Forever.
another episode
Yeah.
Rabbit hole.
on points, right?
Yeah.
You mentioned points. So, when you see companies that are offering, hey, we have a 3% interest rate, we have a 4% interest rate, and that is the headline, that should be your ticket to go, okay, but how are you getting there?
Red
Yeah.
flag. Let's
Right?
get more information.
Exactly. Yeah. Look for more information, because they're going to grab your attention. They're going to say, now you can refinance your home from that 7% to 6% and 5%. There's ways that they're doing that aren't upfront to you.
Yeah.
And, so Colin, can you go into that a little bit?
Yeah, and I'll tell you why that happened. So there was a little thing called COVID. And once COVID happened, it turned everybody into online shoppers. And then once it became online, and the whole world has become so online dominant, it's everything about headlines and what's going to move people and what's going to grab attention. And so there's things that you have to be wary about. Is people will advertise, hey, I'm giving a 5% interest rate or a 4% interest rate, whatever it is. There is something called points. And what that means is that is a cost to get that rate.
Cost to who?
Cost to the
Consumer.
Consumer or the borrower, however you want to phrase it. So I saw the other day that somebody was offering a 5%, no, it was a 4.7% interest rate, and they were getting charged 5 points. A point is a percentage of the loan.
1%
So that
of
means-
100,000 is $1,000.
Right. So that means that they were getting charged 5% of the loan amount just to get to that rate.
For
Does-
context, at a $500,000 loan, that's $25,000 you have to come up with it close
Yeah.
Out of pocket.
to
Yeah.
get that rate.
Or
Now-
you refinance it back in if long term.
Mhm.
Again,
Yeah.
talk to the
For
expert.
sure.
It
And-
makes sense.
And there is always going to be a break-even point of, like you said, does it make sense right now? Are we going to see 3% interest rates tomorrow? No, we're not. Are we going to see it in our lifetime? Maybe. Who the hell knows? If I had
I
a
don't
crystal ball, for the record, I'd be betting that the Denver Broncos just won their last 3 straight, and boy, I'd be very wealthy. But I don't have a magic.
You're lucky if they every other
Take it
weekend.
easy. Hold
I mean,
on.
Come on.
Don't disrespect the Broncos. If I had a fortune-telling glass, I definitely would not be doing anything that I'm doing now. So the problem is you don't know. But what we can do is we can build into a what-if simulator. And let's say, what if interest rates did come down? Well, I can tell you if they came down in the next year, what your break-even point is. Okay, $25,000 divided by 12 over 12 months. How much money are you going to have to save to get to that break-even point? And a lot of that stuff is where we start to come into the point of like, no, that does not make that sense to spend that
Funny.
much money.
Those are
to
the
get
same
into that.
conversations we have when you're buying the house.
100%.
How much are you coming in with? Hey,
Mhm.
20%. That's
Yep.
probably the point that you should invest the rest in something else.
Yep.
Because every 10,000 you're bringing in, you're not gonna see it back. I'd rather
Yeah.
you invest in something
Yeah.
else, right?
And there's
Same
a lot of people,
conversations.
and I'll tell you, most of this podcast has probably been 201, 301 on economics and mortgage rates and whatnot. The 101 is just pair with somebody that's going to break all that stuff out of you. We can break it out high level. We can break it out low level. We can break it out however you want it. But the big thing is like, let somebody explain it to you on whatever your specific situation is going to make sense.
Case by case.
On whether or not it makes to refinance now, later, whatever. And the same things goes, we're talking heavily on refinancing. We're talking, you can apply that to buying a home, whatever the situation is. Just pair with people that you trust and people that you, at the end of the day, I can't tell you that I'm going to talk to every single person that watches that podcast. But what I can tell you is no matter who you talk to, just make sure that you feel like you trust that person and they're giving you as much advice and breaking it out as clearly as humanly possible for you, so to help you educate your decision.
Well, let's do an example real quick since I have my calculator out. So let's say you do spend 5 points, right, to get that, what is it, 4.5%?
Yeah.
Okay. So let's say that costs you $25,000, but it saves you $600 a month.
Sure.
Okay. So if you take $600 a month that you're saving, you take that $25,000 divided by $600 a month. That means you've got about 42 months to break even. Divide that by 12 means
Dang, you do math like
that in
on the other end. How
in
I do
3.4
math. I usually do
years,
the math like you're saving $600
Backwards,
times
forwards,
a
forwards,
year. You're
backwards.
doing this.
Put it this
It's gonna
way.
take you this many years.
At the
Yeah.
end of the day, if you spend $25,000 to lower your mortgage interest rate, lower your mortgage payment by $600 to break even on that $25K, it would take you 3.5 years. So are you living in the house for longer than 3.5 years?
Yeah.
Maybe.
Are you going to live there
that's
Do
long?
you need
great
that
conversation to have.
$25,000
Will
to
interest rates be
invest
that
somewhere
low?
else? Maybe. That's the conversation. So
Well, and I think, it's
And again,
obviously-
leverage too, though,
well-
because I'll play the devil's advocate really, really fast
Yeah.
with that. If you just want to save the $600 a month for a
Yeah.
year, it doesn't matter if I break even because I'm leveraging what's already built into the house, which is the equity. And then whether it sells or not, I'm going into something else.
Right.
Maybe it's the now money, right? So you have to have that conversation.
Yeah.
And
More money.
I think, Colin, thank you so much for coming on, man. This is such a great informational episode for the watchers and for the listeners. I think now is a really good time to move into our one rock takeaway for today's episode. And for new listeners, our one rock takeaway is just kind of a final thought on today's topic, which is refinancing your home mortgage. So who wants to take it first? I can take it first if you want.
Anybody but me.
All right.
I'll be honest. I forgot we were drinking whiskey because I was just hanging out with the boys.
Yeah, I love it. That's
That's
why
the
we
point.
did it.
I
That's
forgot
it.
we were
That's
doing
the
a
point.
podcast because I was drinking whiskey.
I mean, I can take it first.
Yeah, go for it.
All
go
right,
for
cool. So this whole idea of refinancing, for the most part, is about leveraging money to get rid of debt. Is that fair to say for everybody? Right. Here's
To help your financial situation.
my word or my caution that I have for people, because I've seen this. I've been a victim of it myself, to be completely vulnerable. What ends up happening is people go into a refinance and they spend the money to refinance. And they say, I'm gonna either consolidate my debt and pay off my credit cards, or I'm gonna lower my monthly payment by $500 to $1,000 a month, whatever it looks like, depending on the situation. I have seen so many people, myself included, that have done that to do all this work, pay this money to get rid of that debt, to consolidate, whatever you want to call it, and then found myself in the exact same scenario 2 years later.
Yeah, but you're
Because
addicted to golf. I'm just
Aside
saying.
from the golf, my point is, if you're going to do it, have a plan to lower your expenses so that you're not just throwing that money away.
Yeah.
Right? There's no reason 5 years into a mortgage to refinance for another 30 years at a lower interest rate, but still interest. It's going to cost you hundreds of thousands of dollars to temporarily get rid of your debt. You want to make sure you have a plan to eliminate it and then save that $500 or $1,000 or whatever it is that you're saving, and then use that to invest in something else that's going to either act as an asset, give you a return, etc.
No, I think that's well said. I think, and I'll segue with you, have a financial plan and stick to it, or else you're going to find yourself in the same situation and you're going to mishandle your investment, because that's what it is. I love the coin term that we did last podcast is forced savings.
Yes.
Your principal reduction is forced savings, right? That's money you're putting in to buy down your asset, which in turns is your principal, which is savings pretty much, because when you sell, you can pull that out. But if you do it just to do it, my example is when you pull out $40K, $50K, $60K to go buy a car, which is a depreciating asset. Now you're kind of upside down on the decision you made, and that's when you need a financial advisor like yourself to say, hey, maybe that's not the best idea, but if I'm like, I don't care, I want the now money and I want to roll in a nice car. Okay, well, you gave him that advice against my better judgment. I'll pull this money out. But if you do have a plan to maybe lower your monthly payments by $1,000 by refinancing, pulling it out, now you're upping your mortgage by $300-400, but you're saving $1,000 a month. That's a smart financial.
Oh yeah.
That goes into what you're saying.
Yep.
But don't rack your debt back up, because then it's just a vicious cycle, and then you need to call a hotline for that.
Yeah.
Colin, you want to take the one right takeaway, or you want me to take it?
Yeah, I think you're going to get a lot of similar things from me every time I'm on here. Anytime I talk to you,
Consistency, baby.
consistency
I like it.
is reach out to the people that you trust. Pay attention to what's going on, but don't feel the need that you have to understand everything, because I mean, for the longest time when I started doing this job, it was like drinking from a fire hose. We're basically practicing law. In the difference of calling a lawyer versus calling us is, like we said, it's free. So reach out to somebody that you trust, and if you don't trust somebody, you can call us.
I
know, Colin,
just had
you-
that conversation. I said, once
like-
we start writing into our contracts, we're practicing limited law.
Yeah.
So, Colin, I know, I think that's a great segue into my one rock takeaway. My one rock takeaway for today's episode is going to be just a simple story. Henry Ford was put on the stand, and he basically had to defend his knowledge and how smart he was in order to see if he could still run his company. And Henry Ford trucks, Henry Ford, he's the one that created it, right? The guy who made cars. So he was on the stand, and they were asking him a bunch of questions.
It's a man.
And they were saying, Henry, how many men landed on the beaches of Normandy? Henry, how many screws are in a C-470 plane? Basically, just trying to discredit his knowledge. And throughout these questions, Henry stopped and he put his hand up and he said, "Look, I don't need to know all of this information, because there is a phone on my desk, and I can dial one number and get the specialist in that area that I need the answer to the question to. Colin is that specialist." And the reason I say that, guys, is coming from a poor space, coming from a space where, like I said, I grew up, soup kitchens and not really being able to have things. Guys, the first time I used a lender and I called somebody, the service that I got and the way that it made me feel of being able to call somebody and get special knowledge that I didn't have to worry about. The second that I called an insurance broker and I had them working for me to find insurance, guys, it gives you have access to this knowledge. That's why we do this podcast. So please take the opportunity, and it doesn't have to be Colin, but I'll tell you, Colin is an amazing resource. He'll answer the phone at 10 p.m. for you, 11 p.m. if you have a question. But my one rock takeaway is reach out to specialists, talk to people who know things that you don't, because your outcome will be way better if you do.
My wife hates it
I like
when
it.
I do it. Yeah, for sure.
I call Colin at 10 p.m. when I need to sleep.
Yeah.
Sometimes I just like
His
to hear
voice
his
is so soothing.
Yeah. But no.
Hey, Colin, what are you doing?
And on that note, I think now is a great time to move into what I'm excited for, the bourbon review for today's episode. And on today's episode, again, guys, we are drinking the Remus Babe Ruth Reserve, and it is a combination. It is a rye bourbon that is a combination of 3 different mash bills, all high rye. I'll tell you what, I've had, you guys know I normally only do one pour, and I've had it open for the episode. This sat and opened so well. Like, as far as just chilling, having a conversation like this.
Candied out.
Yeah, it did.
It sweetened up a
Yep,
bunch.
and it's because you guys mentioned my palate at the beginning, right? At the beginning of the episode, I was like, oh, this is a little sweet, this is a little dry. Now, sitting just having a good conversation, learning a little bit,
Well, and
I'm in. I like it.
Also, I love
the
your
first
backhanded compliment to yourself.
Jesus, whoa,
Guys,
whoa. Such
What's that?
violence. With
No, I'm
people
just saying,
backhanded.
like, you've had 2.
Mm-hmm.
I've had 2.
Mhm.
You've had 2. Charlie, as you all know, I only have 1 during this episode.
Yeah, hey.
As you only know, I am the non-heathen
No.
one in the podcast. These
No.
heathens here have been drinking.
No.
When you're as
Savages.
sophisticated as
It's awesome.
me, we don't need to drink.
No, but
Whatever, Charlie.
I'm sorry. I like having the control. We
Same.
don't have JC's glass.
Me too. I just
I'm
like to
saying I
control
like
maybe
having the
2 or 3
control glass. The one
pours.
that's been.
Oh, so if we had JC's glass.
I might have to.
Ah, okay.
might-
Bullshit.
So, all right. So
I've
now
had
we're
one
blaming
before.
JC. He's not even here.
Call bullshit.
No. What are you guys thinking? Because I mean, this.
It's evolved.
It did,
Mhm.
and it evolved in a way where
It
it,
has
didn't
evolved.
dissipate. It dissipated in the spice, and it
Mhm.
kind of
It got
opened-
sweeter.
It got sweeter.
The caramel notes and the vanilla notes came out, And again, this is Charlie, my second pour,
Oh,
also known as better than the first pour.
Yep.
But
Yeah.
no, so the licorice and the cinnamon and the peppercorn that we tasted in the beginning
Done.
has given way to caramel, vanilla,
Can I give a wacky?
dried fruit.
You know my wacky ones?
Oh God,
we all know your wacky ones.
Pulled taffy.
like
I
Like-
didn't know that wacky one.
The pulled taffy.
I
Like,
think saltwater taffy.
it's saltwater taffy. Yes, that's
saltwater
what I'm.
taffy.
That, yeah,
Nope, agreed.
kind of like that.
Agreed.
Kind of waxy, sugary.
Speaking of, how do you know about saltwater taffy?
Why? Because I'm brown. I don't know saltwater taffy.
No,
that what
but
you're saying?
it's
Every
mainly an
time.
East Coast thing. Like I would expect you to
Oh,
know what
I know
saltwater
saltwater.
taffy
My
is.
family's from Florida, bro. That's the dirty South or the East? I don't know. Come on.
I'm saying.
He
I'm
has
just
like
saying.
he has the saltiest saltwater.
But saltwater
Come on.
taffy, normally, and you'll agree with me, is
It is
usually
from the
like
South.
a Maryland, Virginia, North Carolina thing,
Yeah.
right?
Oh, yeah. Mhm.
Yes.
yeah, I don't know. Yeah, it's
Whatever.
tapped
You don't know
I'm
what
brown,
saltwater
I
taffy
don't
is.
know
Saltwater
saltwater
taffy is
taffy.
very different, but I agree with you. It is.
Mm-hmm.
It is a
Must
saltwater
I
taffy.
remind you I'm the
Yes.
minority in my household with my family?
Oh, that's great,
Same.
Colin. I want to get your input. What are you thinking?
It's good. I'm just kidding.
It is. It is
In
surprisingly.
comparison to
I had
Jack
zero
Daniels.
expectations for
Take
this.
it.
I'm
No,
not
it's
gonna lie.
it's good, dude. It evolved, right?
Yeah, and I think I talked about it at the beginning. Not all over 100 proofs are created equal,
Mhm.
and this one was very, even from the beginning, was very smooth. But yeah, definitely like as you continue to go, that second pour is always the
As
best.
you're continuing to partake, unlike Charlie, it gets a little better. Like
Hey,
the
Charlie,
conversation.
hold on,
Still
just to be
enjoying
clear,
it.
did you have a second one?
No, he did not have a second.
That's what I
one.
was saying.
That's what we're saying.
So I
He
say it was a
backhanded the
backhanded
shit out of you.
compliment of like,
He
Colin.
is a saint.
I know
He's the best.
No.
This guy.
this guy.
No, but yeah, very, very good.
How does it compare to your Jack Daniels?
How does it compare to your Coors Light, Colin?
Jack Daniels, Coors Light's gross. Do love
Shut
Coors.
your face. What do you drink beer wise?
Look at him. He
No, I'm
tries
just
to
gonna call
insult
you
me
out
and
right
then
now.
he
What do you
backs it
call
up.
beer? What do you drink? I like Coors Light.
Me?
I like
no,
Coors
no.
Banquet.
I like Coors. I'm an IPA.
I'm not an IPA guy.
Yeah, I like.
I'm a lager.
No, I
I'm
like
just gonna
having
say.
all my calories in one beer.
Oh, that's like a meal.
and
Too
then
much
having
IPA.
3 more.
Not
love
me. I like it, but
Uh,
I do like my darker beer.
Compared to Jack is very sweet. But if we have to compare it to something,
I'm gonna tie him up.
um,
Can I just tie him up?
there's a
now?
couple things that I like in a whiskey, and if it doesn't absolutely smack me in the face, I'm a big fan. And this one did not. So,
I like
the
it.
caramel notes just
Yeah,
Mhm.
pop.
exploded.
yeah,
Mm-hmm.
yeah.
Caramel
The
is-
stuff that
Caramel is a prominent on a rye is crazy.
Yeah.
Yeah,
Mhm.
and I'll say this: if you don't like choke when you're drinking bourbon, because it's so strong on the first taste, and that is also a tolerance build too. And for me, I've drinking enough that if it's making me choke, it is a strong one, or it is just like straight gas. This
Colin's
one,
into
I mean,
S&M.
the second it just hits your lips, like you definitely get a different taste than on
What
the
the
second
nose is,
pour.
right?
Yeah.
Yeah, but we've said it with everything, right? The first sip's gonna be fire. Get over that.
But the second
Mhm.
the
Throw a new
second
one.
pour that Charlie doesn't know about
Oh, dude, you're in another realm.
is no, but it's a completely different glass.
It is. It really is.
It's a completely
100%.
different glass.
Well, now I
100%.
got to chuck. No, I'm kidding.
Yeah.
no.
It-
Goosh.
it is a completely different glass.
So, if you guys are listeners or viewers or your first time, what we do is we rate our bourbons on a rock rating scale of 1 to 10. Closer to 1, the better the bourbon. Closer to 10, the worse, because the more ice, the more rocks you put in a bourbon, usually the worse it is. So, I'm interested to get you guys your rock rating. But what I want to do first is give you the price of the bottle.
Okay.
Because I do think it's going to play into it.
Okay.
Maybe.
So this bottle will range anywhere between $200 and $220 for this bottle.
It did change a lot for me. Actually,
Yeah,
that is
uh-huh.
a huge difference.
Mm-hmm.
I didn't know it was that. I didn't
That-
know it was that high.
Mm-hmm. That's why I wanted to do. That's
Is
why
it
I wanted
because
to
of
get
the
price.
limited edition Babe Ruth?
It's yes. So this Babe Ruth Reserve. There's a total of just over 10,000 bottles.
Hold on,
So
$200.
it is. So it is limited.
Jeez.
But That's why we do this
That's a
podcast,
pricey
right? And
bottle.
that's why we're grateful for
You know what,
Chris
though?
and the Rouge.
It doesn't change a lot for me.
Is because
No,
they give us,
I was gonna say.
they give
I'm,
us
I'm
the
joking
access.
over here, but
right? But they
the
give us
juice
the
is
access
good.
to these bottles. So if you guys have any questions and you don't want to go out and spend that $200, you can come here and we'll give you our honest review.
Mhm.
Again, Chris
or come
and the
get
Rouge
a pour
know.
from the Rouge.
And that exactly, and that's what I was gonna say is the bottle itself is $200, but when you come here to the Rouge, they have phenomenal pricing that you can sit down and say, hey, I want to try something that's a little bit higher end, but I really don't want to go spend on the bottle. And they will not only walk you through what your taste palette is and help you find a bourbon that suits you and your own palate, but you can always count on the fact that the pours are worth it. And you're gonna get the knowledge from it. So let's go ahead and give our rock rating. I will say the price plays into my rock rating significantly for this.
And
so
I could go first if you
go
allow
for it.
me to.
Mm-hmm.
If you excuse me, the first pour and you told me it was a $250 bottle, I would have give you the glass back. It was good, but it's still a rye. My palate's it's high proofing, but it's not heavy on the spice. I like a more mellow, strong bourbon when I'm drinking bourbon. Obviously, this is a rye. Second pour, it opened up into a whole nother animal. It is very sweet. It is very fruity, but not like the dried fruit, like fresh fruit, almost cotton candy kind of. It evolved well. Like my first pour to this pour, not the same liquid.
Okay.
250. I'm a baseball fan. I played baseball my whole life. It changed the rating a little bit, but not by much. I would still rate this one a 2.5.
Okay. All right.
Just because it opened up beautifully. I could drink this second pour all fucking day.
Oh, yeah.
Excuse the language, all day long. With good conversation, it's a
said
great
frick.
You
juice.
know
Frick.
what I'm saying?
No, we don't say freak. This is 18 and older. Have you not seen his Only Home?
Hey. Second one's out now. Episode 69.
Coming to you.
No, so I mean, when it comes to a bourbon or whiskey, in this case, right? I'm all about the story and it taking me on a journey. This took me on a journey.
Guided you?
It did.
Little-
I started in hell.
Little hand holding?
I did.
Mhm.
Like Dante's seven circles of hell. And I now feel like I have gotten at least back up to like Mount Olympus.
Someone's holding
It was your pillow.
the warm
Grab the
embrace.
pillow.
But no,
That's a good
yeah,
question.
200's pricey, right?
It is. It's out of the comfort zone.
It's out
for
of the comfort
most.
zone, and I'm trying to think. We tasted a $180 bottle when we first got here, and that was
Heaven
the
Hill.
Heaven Hill.
But would this be a bottle that you buy for the World Series and share with some friends that drink bourbon?
And that's kind of what I'm thinking, right?
Mhm.
Because
Special
when I look
event?
at the Heaven Hill, like the Heaven Hill is great, but it never changed. It was just good, and we talked about it. It was just consistent, right? I actually like how this evolved because I think it lends itself, and I'm a big proponent of can a bourbon or a whiskey change based on the type of cocktail you make, and I think this would lend itself to a Manhattan,
Everything.
an old fashioned, neat, a smoked old fashioned, a New York sour, and that's why I personally like ryes because I feel like they have range.
Yeah.
Right.
Have you ever found yourself drinking something and you're like, I'm done?
Yes.
This one, it was like,
I kind of want another one.
whoa, I
just to
kind of want
see
another one
what the
because
next one is.
it evolved into something really, really good.
Agreed.
It's
So
insane how much evolved.
I'm at probably a 2.8 ish.
Okay.
I don't think it's as good as the Heaven Hill only because that consistency is something to. It depends on your taste, right? But I feel like the second pour was much more Heaven Hill than the first pour.
The first
Right.
pour was like, it's all right.
So
If you told me I paid $200 for it, I'd be like, ugh. Second pour, I was like, okay, I could see it. And maybe the third pour, I'm like, hey, let's go.
Yeah, if we had like an
It's
exclusive,
on.
an exclusive thinkers and drinkers type of like, hey, high end bourbon, you got to bring something that's going to wow people.
This
I
is
would,
it.
I would bring this.
100%.
So I'd say about a 2.8.
Okay, Colin?
Okay.
Coming from Jack Daniels, -3.
Jack Dan's so good. Shout out Jack.
I want the sour mash, baby.
Yeah, I think the crazy thing is the change from the first pour to the second pour.
been consistent.
Night and day, man. It's crazy.
Except
Yeah.
for Charlie.
Yeah,
Ah, well,
poor guy. Just gets belittled up here.
You get it, poor guy. You get it?
Poor guy. Yeah, his ratings gonna be skewed because he
Damn
didn't
it.
have the second glass.
You know what? If it wasn't for Charlie, we wouldn't be here. Let's just throw that
Nope,
out there.
we love
Charlie's the
Charlie.
man.
We love Charlie.
I think I'm gonna go with a 2.
Okay.
Can I ask you a question?
Talk to me, Goose.
Right, and only because I know, like we've tasted now 70 different bourbons, right?
Mhm.
You have not.
Mhm.
Would this be classified as the best bourbon you've ever had? You personally, not, but just you, like the ones you've tasted. Because 2 is a high rating. That's the only reason I'm asking.
For sure. No, it's up there. I don't know if I'd say the best. I don't think I can tell you what the best is
Okay.
either. But it's definitely in my top 3.
Okay. It's fun to get that perspective
Yeah.
because Colin, he does drink bourbon, right?
Mhm.
But he's
Yeah,
not on the show every single
For
week.
sure.
So
Yeah.
he's got a different perspective. So that's why I asked.
Yeah, and
I think top 3 is fair, honestly.
Yeah.
Like for
Yeah.
people that don't do this like
I
every
would-
Wednesday.
I would say yeah,
Yeah,
100%.
big fan. I'm gonna give it a 2.
Yeah.
Okay.
I really like it. And then the story, and then Babe Ruth. I
Mhm.
mean, that
Yeah.
kind of, I would have probably been maybe a little bit higher, but because it tied into baseball,
Mhm.
kind of brought me nostalgia, and then the juice just evolved
yeah.
into something.
That
We
is-
talk
As
about
a,
stories. I mean,
as
stories
a-
are powerful. So
As a baseball player who grew up in New York, who's
What
been at
position you
Yankee
play?
Stadium, I was first base, pitcher, and third base.
Okay. Third base, baby, all
Yeah.
day.
T-ball.
I will say the look of the bottle, like the marketing is phenomenal. The bottle looks regal. It pulls in that 1920s vibe. The price plays into it for me significantly, only because again, if you're trying to get to that higher level of bourbon, this is a bourbon that I would say try it at a place like the Rouge before you buy it. Only
100%.
not that it's not a good bourbon, but at $200, this is probably the most expensive bourbon that we've had on the podcast as of this date, episode 70, right? And so I love everything that they're doing with it. You can know what a bad it was for a Babe Ruth. They're doing the mix of the 3 different ryes for his number. For me, it's just the price point plays into it really heavy. And I think that's why I'm going to land on a 3. Again, I did only have the 1 pour, but the way that it evolved, I'm getting the same thing that you guys got is it's the sweetness is there, the burn is gone. But for me, I definitely think that the price point puts too many people, too many normal bourbon drinkers out of the realm of this bourbon that should be able to access and drink it because of how good it is.
I always compare my go-to cheap bourbon, right?
Mhm.
Larceny. It's high wheated, super easy to drink. But to compare Larceny to this is apples and oranges.
Yeah, this is a
This
whole
is
nother
a
level.
whole nother level. I
This is a
mean,
whole nother level.
First of all, it's a
bourbon.
rye. Second of all, it evolved tremendously.
For a
not
rye
just
to
a
have
little
the
bit.
sweetness that this has.
Not
blows my
just
mind.
a little bit. You take this, the Smoke Wagon. We all like the Smoke Wagon
Mhm.
rye. It's a great rye. We rated it high. Your first pour of Smoke Wagon and the last pour of Smoke Wagon was pretty consistent.
Yeah, this
This is bonkers.
Yeah.
this is like an everlasting gobstopper.
100%.
Everlasting gobstopper.
The juice
Pick
that
it
I
up.
drank, the second pour to the first pour, night and day.
Agreed,
It's not
yeah.
the same pour.
Agreed.
It's insane.
No, this was good. We gotta shake Chris's hand for this one. This is an awesome bottle to try.
Shake
And then
his
maybe let him
Um,
take one home so we could try this
shake
again.
his
So
hand.
I think average rise we're what 2.7
Yeah,
ish.
2.7. Yep.
Not bad.
And again,
That's a
the
good
only
bourbon.
reason
That's a
that
good
I'm
rye.
at the 3 is because of the price
Price.
point.
And we've always said that the ryes are a separate category.
They
yes,
are.
absolutely.
Yes.
I'm a
And
history
this-
junkie,
I
so
think-
that also like
Right?
it gives me a
Yeah,
boost.
exactly.
And
No,
I think
agree.
I think that this plays into our, if we were going to pick a top 5 that we've had,
Sure.
this is going to be in there.
100%.
Yeah, I'd agree.
It's a good bottle.
I'd agree.
On that note,
Good
Colin,
bottle.
I know you kind of did a little pitch earlier, but let the people know where can they find you? How can they get in contact
Yeah.
with you?
Colin Keenan, New American Funding. You can give me a shout at 720-202-5399. That's my phone number. And then colin.keenan at nafinc.com if you guys would rather email me. But yeah, definitely reach out if you have any questions. I'm a pretty straightforward guy. I will just give you the answers, no strings attached.
No
Colin's
emotion.
But you gotta go
information
through it.
is exactly like his voice, just straightforward.
Straightforward.
Yeah.
No emotion.
There's-
Hey, Colin, how's it going? You guys want to go? I don't know. I got shit to do
I'm
today.
like, what's
I'm
up,
not going
man?
to go
How
out.
are you? Yeah, there's not a lot of fluctuation here.
And all of
that
his
is
His
my
exciting
temperament.
voice is the same as good morning voice.
Just like
Yeah.
last week's episode with Art, all of Colin's contact information will be in the description for the episode, audio and video. So check it out there if you want to reach out to him. Guys, how can they get in touch with you?
Oscar the Realtor, Oscar the Realtor CO across the board, and obviously OscarTheRealtor.com.
Yeah, the Colorado real estate guy on everything. So
Awesome.
super simple.
Look me up, Charlie Sardelli. I'm gonna change from the and that lifting agent just to my name. Make it a lot easier for everybody.
It's the Italian Sardelli.
Sardelli, right?
But no, you got to reach out to Colin. Love this dude. One of my favorite people in the world. You got to call Colin up.
On that note, guys, if you have any questions for us, and again, we're going to bring way more guests on the podcast for you because we want to start, like Art said last week, distilling this information and making sure that you're getting it straight from the best sources as possible when we talk about certain topics. So stay tuned because we're going to kind of bring a lot more of this knowledge and include more people in. But if you want to get in touch with us or get in touch with us to get in touch with these amazing networking contacts that we have in the industry, you can always reach out to us, resotr@themilehighperspective.com, or give us a ring.
720-584-3361.
And guys, thank you so much for being our viewers and letting us do this because we have a wonderful time. We learn a lot every week, and we'll catch you on the next week's episode. Cheers.
Cheers.
Hello.